Hello and welcome to the Daily Brief by Zerodha, where we cut through the noise to bring you the biggest stories and developments in the markets. I'm your host Tarun, and today we've got three interesting stories for you. We start by talking about the inflation in India and the US and the totally opposite comments from Jerome Powell and the RBI Governor, Mr. Das. Next, we discuss if there's a bubble brewing in microfinance. And we finally talk about TCS's results and if it means good times ahead for the Indian IT sector. So, let's start by talking about inflation in India and the US. Inflation in India and the US is a tale of two cities. Yesterday I spoke about the bullish comments that Jerome Powell, the Federal Reserve Chairman, made about a possible rate cut this year. And I also told that the inflation data would be announced as well. Well, the US inflation data came out and it's good news. The US Consumer Price Index fell to 3% last month, the lowest it has been since May 2020. The core inflation, which removes volatile components like food and energy, rose a little, but it's the smallest rise since August 2021. So, good news all around. Because of this, the profitability of a rate cut in September this year is at 95%. Back at home, the RBI Governor Mr. Das, in an interview with CNBC TV 18, said this, and I quote, "The last inflation print was at 4.7%, and the June inflation is expected to be out tomorrow. That is also expected to be as per the surveys, likely to be close to 5%. So when we are at 5% and our target is 4%, I would feel it is too premature to talk about interest rate cuts." Speaking about Indian economic growth, the governor said, and I quote, "The momentum of economic activity, the momentum of growth in January to March was very strong. And the momentum of economic activity in the quarter ending June, that is the first quarter of this year, also continues to be strong." So given this, I think 7.2%, which we have given at this point in time, looks very much achievable. The governor also made some other interesting comments, and to summarize, the RBI would decide on policy based on observable metrics and not on any theoretical constructs. India's structural growth drivers are strong, and the country is moving towards an 8% growth trajectory. RBI is not primarily worried about the stock market going up, but rather it is keeping an eye out for potential spillovers to the broader economy. The RBI has no major concerns about people borrowing money to invest in the stock market. The Indian inflation data for June will be released after this recording, but a Reuters poll of 54 economists predicted that inflation would rise to 4.8% in June from 4.75% in May. The rise is expected as vegetable prices have risen sharply because of heat waves. Indian food inflation had stubbornly remained at 8% throughout 2024. But the good news is that after a slow start, Indian monsoons are picking up pace as heavy rainfalls have spread across the country. Now let's figure out if a microfinance bubble is brewing. Indian credit growth after the pandemic has been spectacular. The overall credit growth has been about 20%, and this is the same with microfinance as well. The industry has been growing at an average of 25%. Now, the Reserve Bank of India has some concerns about high credit growth in certain segments. Early in the year, they made it costly for banks to give unsecured personal loans. Now, it looks like they are concerned about the high growth of microfinance loans as well. Microfinance companies, or MFIs, exist because India is a credit-starved country. As surprising as it may sound, the vast majority of Indians have no access to formal credit. And by that, I mean bank loans. So microfinance companies were born to serve the needs of the people in small towns and villages. MFIs offer small loans and financial services to underserved, low-income individuals and small businesses, with the aim of empowering and improving their economic situation. Now back to the news at hand. According to unconfirmed news reports, RBI has apparently asked these MFI lenders to slow down in Bihar and UP. But why? It could be because microfinance loans in both of these states have been growing at 30 to 40%, the highest in India. Even Microfinance Institutions Network, MFIN, a self-regulatory organization that oversees MFIs, looks like it's concerned. It recently agreed on two credit policies with its member lenders. The first is to limit each borrower's total borrowing to 2 lakh rupees. The second is to restrict them to a maximum of 4 lenders. Although these measures only affect a small percentage of borrowers, they reduce the risk of borrowers borrowing too much. At a national level, almost 7% of the borrowers have exposure to 4 or more lenders. Bihar and UP have roughly 9 and 7% of the borrowers having loans from 4 or more lenders respectively. It's scary because rapid loan growth can often mean low-income borrowers borrowing beyond their means, which means they will inevitably stop paying, leading to defaults, which is bad for both the borrowers and the lenders. Some banks and NBFCs like Utkarsh Small Finance Bank, Satin Credit Care and IIFL Samasta have high exposure to these states. So far, the bad loans are under control, and there are no major concerns that these bad loans will spike despite elections, heat waves, and rural distress. Some institutions operating in this space have more than 50% exposure to these states. So if things were to go wrong, it could affect not just the business, but everyone. That is, all borrowers and lenders across the country. Now, let's talk about TCS's results and what it means for the Indian IT sector. TCS reported its quarterly results last week, and the numbers were decent. The company reported a 5.4% year-on-year revenue increase and a 9% rise in net profits. TCS is the largest IT services provider, and its results are an indication of how the sector is performing. IT has struggled over the last couple of years, and it finally looks like the worst may be behind. K. Krithivasan, the CEO of TCS, noted, and I quote, "Both BFSI and North America are intertwined because we have a great exposure to BFSI in North America. As BFSI starts seeing growth, North America will too." Despite a slight impact on EBIT margin due to wage increments, TCS has still maintained robust margins. In the past episodes, we have spoken about how young, educated Indians have to do unskilled jobs because of the lack of employable skills. Coincidentally, a journalist in the quarterly call asked an interesting question that caught my attention. The journalist asked Samir, the CFO of TCS, about TCS's strong margin performance despite the wage hike and whether the reduction in employee cost as a percentage of revenue was due to paying employees less or increased offshoring. Here's what Samir said, and I quote, "Your question in terms of the manpower cost percentage, as you would have seen in the last 3 to 4 quarters, we have been driving better productivity, improved utilization, and reduction in subcontracts for cost. The first to reflect better on the manpower cost, and that balances out some of the impact of increments in this quarter as well." In their earnings release, TCS said that clients have shown increased interest in AI solutions, and so they have been making significant investments in AI. Despite the interest in AI, most of the AI-related projects seem to be experimental in nature. But the hope here is that this will start driving revenue in the future. Given the hype around AI, it remains to be seen if that will be the case. Looking at the broader Indian IT services sector, Nomura Research expects the lowest revenue growth in the first quarter of financial year 2025, with recovery anticipated by financial year 2026. Factors such as interest rate cuts in the second half of the calendar year 2024 and post-US election decision makings are expected to boost demand. Generative AI adoption over the next 12 to 18 months should further drive the growth. And that's the daily brief. Also, this is probably the last time you'll see me. You will have to put up with Anurag again. Anyways, thanks for tuning in, and we'll see you in the next one.